Oh, I left the door open again.
Good morning and welcome to Your Real Estate Life. It's your day in real estate radio. Today we speak about buying, owning, and planning with confidence. I'm Michael Harris, Mortgage Loan Originator 233410 with United Mortgage Corporation of America, NMLS 3189. Visit our radio website at yourrealestatelife.com and get started at unitedforloans.com. That's unitedforloans.com because we are for loans. We're just not for the interest that you're paying. Now you're listening today, Your Real Estate Live on Fox Sports Ventura, 1590 AM, 97.9 FM. And we're also on K-Earth 101, our Sunday morning audience at 7 a.m., streaming at kearth101.com and our KBTA audience at kbta.com. Now you can join us on our YouTube channel at Your Real Estate Live. We're also streaming live on our LinkedIn channel as well. But write down our number. You're going to need it, 888-543. 3980. That's 888-543-3980. Now, Your Real Estate Live is designed to restore clarity and confidence for consumers that are navigating the real estate and financial markets. We're here to make sure you have the information you feel confident about in order to make decisions going forward. Now, whether it's lending, is what I do as a mortgage banker and broker, we're able to help you going forward or in reverse. We're able to help with those equity lines of credit, commercial as well, and construction. But, we primarily focus in 5 markets: California, Colorado, Montana, Texas, and the state of Washington. Now, in focusing in those markets, that's for our going forward and reverse markets and our home equity lines of credit. When it comes to our investment market, our debt service coverage ratio, DSCR market, we can do that in 46 states. Currently, we have some transactions going on in Florida and Tennessee and Connecticut and some other markets, and we're able to get those done for our past clients, current clients, and you who are watching us right now. So give us a call, 888-543-3980. That's 888-543-3980. We want to help you have informed decisions when it comes to your short-term and long-term goals. And later in the program, we'll talk about the Money Max program, where you're able to have a perfect financial GPS for your personal finances. So very important, making sure you're making the right decision for the right reason at the right time. So as we look ahead here in 2026, we're already finishing our first month pretty soon here. One thing's clear, we got global politics, and that does affect some personal finance decisions. I mean, we're looking at still possible trade disputes, tariffs, shifting alliances. I mean, we got some stuff still going on with the U.S. and China that directly affect inflation. It looks at interest rates. We're kind of meandering right about that high 5, early 6 level. Publicly, you see early 6s, but that's paying some points in fees. Points are a percentage of your loan amount. So it's very important how much you spend to get your result and how long is it before the monthly benefit is better for you. So we look at that as well. But, we look at certain economists right now are talking and believing that U.S. and China might be able to start getting some of these tariffs in line that may help a little bit on the consumer price end. Now, we've seen some benefits in some areas not, depending on what price tag and what it is you're spending it for. I've mentioned, or actually I haven't mentioned it here, but I had to buy a new dryer. And of course, the cost of those, yeah, it is what it is. But depending upon where your mindset was in the last time you did it, things are a little different. So it's a question how many consumer goods and items you're buying, and then also where you're buying it from. One vendor said it'd be a 2-week delay. It's not there. Another one got it to me in 2 days. So it really depends. And that one that got it to me in 2 days was cheaper than the one that said it was on order for 2 weeks. So, you got to understand your right sources and directions that you're heading and going. So we're really watching what's going on with assets, your liquid assets, the monies that you have available to spend and the monies that you want to help look to save, whether it's retirement assets, but getting through to the point where you have a retirement to get to. We've seen investors looking at gold, silver, and other vehicles, as well as real estate. I've been looking at the silver and gold trade hitting close to 5,000, over 100 on silver. Holy cow on silver, 200% in the last year. So these things are really moving fast. Now, there's a lot of different items that are causing maybe these things to occur. So again, I'm not giving investment advice. Check with your professionals, because you think working with a professional is expensive. Try working with an amateur. I'm an amateur to that. I may have some knowledge and some expertise to my opinion, but I'm a mortgage banker. I'm a licensed broker here in the state of California. I don't list, I don't sell, I lend. I do have an insurance license for life, health, and disability. I don't write policies, I refer, but I am licensed. Give us a call, 888-543-3980. That's 888-543-3980. Now, when it comes to lending, when it comes to finances, confidence does not come from predicting the future. It comes from preparation, understanding, and strategy. And that's really the primary focus of what I want to bring to you here at Your Real Estate Life. When we talk about lending, we have interest rates, depending upon where you are in your life, self-employed, salaried, disability income, social security income, pension, whether you have multiple property, partnerships, corporations, whether you're buying a property using assets as asset depletion, or maybe it's the interest you're earning on those investments. All these things matter. And what we do when we look at a file for qualification, whether it's the property qualifying or you or a combination, we want to get the most amount of income from what you have or what we can garner or get to get you qualified for what it is you're looking to do. So when we look at a loan, we're looking at credit, we're looking at income, and all the other particulars also then to the property. So sometimes the loan's approved subject to the property. Sometimes the property's right and we're still working on you. So it's getting prepared. The idea is buying, owning, and planning with confidence. And buying with confidence means understanding your loan options. It's the payment structure. It's not just a rate. Is it over 10 years, 15 years? Is it 20 years, 25, 30 years? What is it? What is it? You want to understand what that is, because that makes a difference to your cash flow, where it is you're spending your money to eliminate other debt. So if we can increase your monthly discretionary monies, it's not to increase it so you can go spend it here, spend it there, and get more in debt. As long as that debt creates more income, maybe. But it ultimately is your decision. But it's trying to manage funds and borrowing and leveraging correctly. So owning with confidence comes into play when I talk about the Money Max account. Owning with confidence. You own the property, you got in, the door shuts, the deadbolt goes, you're in a panic because you can't leave. You need to be able to understand how to come in and come out as you need to do so. So that's what this show's about, planning with confidence. We're going to talk more about that today. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. Thank you for joining us. We'll be back right after this break. Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. Thank you for joining us. You can catch us right on our website at yourrealestatelife.com or go to unitedforloans.com. That's unitedforloans.com. When you go to our website, you're going to be able to view our previous audio of our program. If you choose to, you can go to our live streams and our past history on YouTube. Go to Your Real Estate Life. And sometimes you can also catch our program, of course, on LinkedIn as we go live on the air. Or go back and you can find that in our old archives and segments. So I appreciate you joining us today. We're here to talk about your real estate life. I was talking about buying, owning, and planning with confidence. And it's so important that each of those steps are there, the preparation, and once you have, and then what you're doing going forward. And a lot of concerns that I hear right now are rates higher than they should be? Are they going to go down? And, I'm looking at the Fed, and it's going to be under a 5% chance the Fed's going down this week. It's not going to happen, people. And then when we look at the next meeting that we're going to have in March, it's only under 19%. So I don't think it's happening either. And then when we go to April 29th, we're looking at under 30%. Holy cow. So we're kind of sitting where we are. The chances are we're probably looking at sometime in June, July, or September when we're looking at perhaps 45% and then getting a little bit higher in the 60s in July. So if we're gaining that then, and usually interest rates are at their best prior to a Fed move, we're not really moving a lot. But right now we're doing a lot of incentives based upon our closing percentages and what we're doing with our investors. We're able to add in 40 basis points as benefits on various transactions, sometimes even doubling that up. So in doing that, that's giving us a lower than market. So when you hear on Thursdays, the statistics, not for the week that you're hearing it, but for the week before you heard it, and rates are at 6.1 something. Well, that's paying even fees. I'm closing loans at no cost at that, or perhaps even lower because of the price incentives that I'm able to then toss in. We're a direct lender. We're a mortgage banker. We can also broker. So in doing that, I'm giving you the best of all worlds. I want to make sure you are there and getting the right transaction, working with a professional as a purchase, and working with that local realtor who understands your market, gets you the best price for what it is you're looking to do. With that said, I'm gathering, making sure your credit score is maximized, making sure your qualifications are there, getting all that done, getting the appraisal, making sure it has value. If it doesn't, then that's where your realtor goes back in, maybe negotiates a credit or lowers because we have to subsidize maybe that difference. Now, in some cases, a borrower puts down 50%. The appraised value to me isn't as important, but it's important to you. And that's where we're watching your money. I spend your money the way I spend mine, sparingly. I want value for my money, and so should you. I don't want to have a woulda, coulda, shoulda. I made a mistake. I won't do that again. We don't want to make that mistake, and we don't want to have to do that again. We want to get it right the first time. Confidence. Now, clarifying creates that confidence. It doesn't mean certainty. It gives you clarity. And I talk about the Money Max account and what that does. It allows you to know your numbers. Know your numbers. Understand your choices. You can stress test your numbers, your decisions, and gain the results. Sounds great. Join me on Tuesday evening at 5 p.m. It's a 1-hour webinar, 5 p.m. on the West Coast. Change the time to your local market. Send me an email, interest@aheadformoney.com, aheadformoney.com. When you send that email, I'm going to get you access to the webinar. I'm also going to give you my calendar. You can set an appointment prior or after. I want to understand where you are in your decision so we can come up with the best answer. It's not one fits all. It's knowing your numbers, knowing where your discretionary is, and where your money is going somewhere it should not, because it's not going to you. I want to eliminate your debt in the most efficient way possible. In most cases, we've been able to see 1/3 to 1/2 the time without changing their lifestyle. It doesn't require a new loan. No one's touching your money. Doesn't require life insurance. For some, it can assist and make it even faster, but for some, not really in effect. You just need a checking and savings. You don't have to own a home. You could be a renter, and we've seen some miraculous results, single digit debt free, and leading them to make other financial decisions. You really can't go wrong. It's not costing you any money. It's a 1 hour webinar and then information I'll send out to you. It's not AI, it's me. I'm going to send that out to you. Interest at aheadformoney.com. aheadformoney.com. So I don't want you waiting to make decisions. I want you educated and gain the information so you can make the decision to wait. Because waiting sometimes is a decision. But if it's not an informed decision, then it's not. So waiting has consequences. No decision has consequences. Acting without preparation creates unnecessary risk. I want to help eliminate that risk. Planning restores control to you and removes the emotional decision making. A lot of times the emotional decision may not come out for the best for you. So it's coming up with the numbers. I love numbers. I put them in the middle of my desk. You may push them off to the left or the right or off your desk altogether. Some CEOs say, hey, I'll push it off my desk. If it comes back, it must have been important. If it doesn't, it wasn't. I don't want you to run your family's life and your finances in that manner. I want you to be confident. I want you to put your head down at night and make sure you get a good night's sleep. Now, this past week, we saw the 10-year note range right about 423, kind of unchanged for the week. We saw the 2-year note close to unchanged, -1. 30-year was down to 12 basis points. That actually was slightly better for interest rates. The Dow was up 800 or down 852. NASDAQ was down 14, S&P down 24. As I said, gold increased $388 this past week, and we approached that 5,000 mark. And oil was up $1.68. Now, oil up is not helping mortgage rates. As oil stays down, that actually helps the trade. So we're watching those carefully from our end. But we're looking at various items also with silver cracking over 100. That's huge. I mean, up 200% on the year this past year. So a lot going on, depending on where you are in the market. But we're here today to talk primarily about where you are with your real estate life, whether you're looking to purchase your first home, move up, move down, add on, consolidate when it makes sense, because you're refinancing for a reason. It's not somebody saying, oh, go refinance. Okay, am I lowering my monthly payment, increasing my monthly? Am I able to eliminate other debt as a result? You don't want to necessarily, and I can't say you shouldn't, but you don't want to necessarily use your home as just a piggy bank because it'll eventually run out. Yes, home prices go up, but sometimes they meander or go down slightly. And we don't want to catch you in a bad drift of what you're looking to do. Gaining debt, but responsible debt, and understanding that debt is what's important, because you want to be able to prepare for that day when something, oh my gosh. And what we've been able to do is we've been able to talk to people about a home equity line of credit. And the reason why that's important is when you need money, it's very tough to find it. But when you don't need it, it's very easy to set up for that time when you do. So we've been able to get, whether it's 50,000, 100,000 lines of credit for somebody. And if you don't borrow, you don't have a payment, but you have it available to draw, sometimes 3 years, sometimes 5 years, sometimes 10 years. But it gives you that cushion that we're able to have. And then if you're not needing those funds, I can show you how to rinse and repeat and actually move further down on your amortized first mortgage. Because I dare you, take a look at your mortgage statement online, or if you get it in the mail, find out what percentage of that payment is going towards principal and what is going towards interest. If you're not 18 to 22 years in on your loan, or you haven't put a lot of extra monies in, your break even 50-50 is 18 to 22 years in. So whether you're 3%, 6%, or 7%, take a look at that, and I'll be happy to go over that with you. You can choose to send me an email and attach it, statement@unitedforloans.com. I'll be glad to take a look at it and go over that with you, or just give me a call, 888-543-3980. In the past week, we've had other items in the news. We talked about Greenland and items there. When President Trump went to Davos, he spoke about not sending troops there and all that, and caused a little bit of relief to the mortgage market. All these things tie into each other. When President Trump was talking about $200 billion in bond investments, rates got better. Then everything with Greenland started and rates went back up. Now they're going back down slightly. So hopefully we're going to catch up. But our 10-year Treasury yield at 4.23 is still higher than it had been when we got to the 4.0 range. And we want to see what we can do to get back. We're looking at Japan yields that had spiked, and we're watching what's going on there overseas and how it influences investors and decisions. And we're looking at the US here, where growth in majority of areas seems fairly strong, but there's outside influences in a lot of directions. And I talk about that key 420. We were trading between 4 and 420 on the 10-year Treasury. So now that we popped over 420, we need to get back and make 420 the ceiling again and not the floor. So if we can get there, we may see rates fall a little bit, but we're already anticipating in the mortgage side, and we're seeing some of our best rates in the last 3 years. So you think waiting is the answer? Let's see the opportunity and what it is you're looking to accomplish. We have multiple people who are making offers this week. We have some offers on the table over the weekend looking to get accepted from our clients, but our clients are getting prepared. They're sending their documentation in. We're getting them approved subject to the property in question. We have some multiple bidding going on. We have one client who has there's 6 offers on the property. And it's always that fun one. Realtors that are listening to the program, you understand. But the counter on the 6 people is, we have 6 offers. Come back with your highest and best. It's always that you're negotiating kind of in the dark or against yourself, and you got to be prepared to what you're spending. But also understand that if you miss it by 5,000 or 10,000, was it worth losing the property? So you have to decide where your notion is and your timeline is, and what it is you want to go do to go back in the market looking for more. So you really need to understand what it is that you are looking to do. 888-543-3980. That's 888-543-3980. I mentioned on Thursdays when the stats come out, it's not for the week that you're hearing it, it's the week that's prior. So we saw the rate was approximately about 609 for the 30-year fixed. And it doesn't sound that bad considering rates were a lot higher. A year ago, we were up at 696. So that's pretty good. But I like to be better. I like to gain that 5999 or that 5875 or get some kind of unique number. We did buy down a loan recently down to 5.198 in order to get our ratios or debt to income ratios to work to close. And it did cost a decent amount of money to buy it down. But then the monthly savings and then doing the math and the recovery time, we'll look at that. But it depends on how long she was going to be in the property, which she was planning on staying in. Certain properties also require different homework, whether it's your property that you're in now or the property you're looking to. Sometimes it has to do with the homeowner's insurance, making sure you can get homeowner's insurance, making sure you shop that early rather than late, like it had been way back in the past that, oh, last minute, you just get the policy. Okay. We need to understand the monthly premium for qualification. We need to make sure you're able to gain coverage. We also need to make sure certain projects like townhomes, condos, condominiums have the proper insurance coverage. Some of them have lapsed. Some of them don't have the right coverage. Some of them haven't done what's required for balcony maintenance, inspection. All of these things matter, and they eventually catch up in a loan process if they're not caught early enough. So we're in the process of gaining and correcting certain items to that, getting increased coverage of policies from HOAs, homeowners associations, and their insurance coverage with the carriers. We're also fixing or clarifying property taxes, previous owners that had reassessments or supplemental tax bills, and depending on how quickly they bought and sold or rehabbed, there's bills that are outstanding or delinquent. So we're gaining title items. And title insurance, if you read their policy, it doesn't cover the items where you're living in the home or taxes as such that may have not been published or out as yet. So it's not like, oh yeah, title took care of it. Well, no, those items are being paid. Now it's up to the tax assessor, whether they're waiving delinquency for notification or whatever the case may be. But that's not up to me. I'm here to help clarify so we can move forward and our clients can save money going forward. So I'm in the process of working through that at this time with a transaction today. But we want to make sure that you do your proper home inspection to understand what the property is. As a lender, I don't need to see the home inspection. I don't want to. If you're comfortable, of course, when I get the appraisal done, some properties will allow a waiver of appraisal depending on the equity or the purchase price. But that appraisal is going to highlight different items, whether they're roof items, this item, or whatever is going on. That's the eyes and ears of the lender. So these things are important. But if you do that home inspection, you understand what's going on. You're going to be living in the property. You want to have it right. Now, maybe you're going to rehab it and do stuff, sure, but it has to have the right features for health and safety reasons. So we're going to look at all that. But when you buy, we're going to be looking at your income structure, your asset reserves, your credit profile, your time horizon. I mean, your life stage, where you are and what you're looking to achieve. These things make a difference to the type of loan that makes sense. Some people look at loans that are fixed for a period of time, buy it down with seller's funds or lender funds or realtor funds. There's different ways and things that you can do to set up a loan, and not everyone is the same. So I'd like to make sure your needs are covered. So it's not which some fancy ad or what everyone else is saying you should do. The best loan is not always the lowest rate. It's the way it's being paid or structured to tailor to your individual situation. So we want to make sure that has flexibility. We want to make sure it has sustainability. I mean, to make sure that you're able to be there, but also withstand the headlines. We don't want it running out in the most inopportune moment. We want to make sure you're connected to what you are doing and when you're looking to do it. And that's why working with a professional is really important. And we're always here and wanting to understand what it is you're trying to achieve. And I say this to many, be careful what you wish for. I might get it for you. I want to make sure that you want the result for what it is we're looking to get. And I said that this week to a young woman who was looking to buy, and she wanted to make sure she can qualify for a said number. And I said, I'm fine. It's entirely up to you. You need to be fine. I can get the job done. I can get you in. I can get this approved. Do you want me to get it approved? Do you want me to get it done? And are you going to be happy when it is? That is really the question. What I try to guide, as other professionals do on the journey, is making sure you're protected at every turn, and the decisions you need to make, you have the proper information to do so. I handle lending, but as a licensed broker here in the state of California, I don't list, I don't sell homes. I lend. I refer. I do have knowledge as a licensed broker. I will look after your best interests as a fiduciary, handling your lending, making sure these decisions are coming correctly and not being done incorrectly. I want to make sure you have the right coverage, the right information, and the decisions you're making that are affecting my moves in lending are being made with the best thought and not being coerced or otherwise. So you have many different people who are wanting to help you in a transaction, and each one of us are helping each other get you to that ending point, whether that's in 10 days, 15 days, 20 days, 30 days, depending on the timeline of your escrow and the timeline of gaining documentation. That's what changes and what varies. But ultimately, it's about you. It's about your real estate life. Give us a call, 888-543-3980. Go to yourrealestatelife.com or take a look at our site at yourrealestatelife.com or unitedforloans.com. We'll be back right after the break. Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, President and CEO of United Mortgage Corporation of America, NMLS 3189, Mortgage Loan Originator, license here, NMLS 233410 for myself. I'm licensed in 5 states, California, Colorado, Montana, Texas, and the state of Washington. We can do DSCR investment loans in 46 different states. We do forward and reverse, commercial and residential, and construction. So we can kind of jockey through all of that. Been in lending now over 38 years, in my 39th year. I've been on radio just shy of 20 years here in Southern California and various other markets at various times and during that career. And my goal is to have you understand your options better so you can make right financial decisions. Nobody should be making them for you, but you need to be educated enough to make the decision that's right for you and your family. So it's gaining information. And with that said, we have an economic calendar that comes out every week with daily news. And as those news items come out at 5:30 in the morning here on the West Coast, 8:30 or 7 a.m., whatever the case may be, we watch these items and it moves the market, whether it's the trading market or it's the bond market, moving interest rates. Sometimes lenders are moving once, twice, 3 times a day. Some days it's really volatile. So as we kind of look at it, we look at treasury bill auctions. What's the supply and demand? Are people buying those treasuries, allowing them to get refinanced or being offered? So it's a short-term government debt. And how is that being received? And what kind of yield is needed in order to obtain or have those investors bite? So investors purchase for safety and liquidity. So when there's times of stress, people then may flee a market and put money into something more stable. So it's a question how the market views what's going on. So these things are important. So why should we care? Why, as I had just said, why? But looking at these strong demand signals for the bond market. I mean, mortgage rates follow bonds markets and not really the news headlines. They're going to be looking at these markets and understanding where the money is drifting and going. Now, these markets will set the tone for the week. Now on Tuesday, we have housing and regional data coming out, FHFA price index. It measures home prices and movements on conventional loans. Those are generally the ones at 832 and 750 and below nationwide. And in some markets, there's a high balance as well. We'll look at the impact there for appraisals, equity planning, refinance eligibility. All these things come out just with a headline. And behind the scenes, many things are going on. As I work on loans, I look at different opportunities to save an eighth, a quarter in fee or in rate. And sometimes that's important. If you're working on a $500,000 loan and it changes by 10 basis points in a rate, or I'm sorry, a fee, that's $500. That's your 500. If I can save 500 here, 500 there, and credit money or lower a rate as a result, that's what we do. Now, lending takes a little bit of time. I've closed loans in 10 days, but I've also closed loans in longer, depending on what legwork need to have been done. Sometimes you got to fix it. Sometimes it's already fixed and it's ready to go. So gaining those results early makes sense. We have regional Federal Reserve data coming out, reflects economic momentum in various districts and areas, and specifically, our region, of course, but of course, nationwide, it affects rates. It influences lender confidence and risk appetite. When you got the secondary guy who's doing the back work and closing loans and getting them what is called securitized and moving them on their trail to get serviced and all that, and getting the yields and what's being earned, when the market fluctuates, all of a sudden they're, oh my gosh, I'm losing, I'm gaining, and they have to make sure they're feeling confident and they're feeling good as they are, so they can offer the better pricing or the midday betterment in price. Now, a stable prices support confident planning. So if the market's stable, you can plan better, because otherwise you don't know where you're planning and you're throwing darts. Sharp movements, I mean, it create a panic, and we try to avoid a panic. We really truly do. We don't want that. Now, on Wednesday, we have the Federal Reserve. They're going to be clarifying any major misconceptions, and they're going to kind of go through that. The mortgage rates are not set by the Federal Reserve, but they're influenced going forward because, as I said, it's less than 5%. So the bond market's not pricing in a Fed move. The bond market prices it in prior. So as we're looking near 3-year lows right now, we're pricing in stability. We're pricing in perhaps one more move later this year, as I said, maybe in the summer. Earlier, it looked like it was going to be sooner versus later. And now, based upon different items and different things being introduced, it looks a little bit more that we're kind of meandering here. And maybe we do get better rates, but it's not influenced additionally by seeing Fed moves. Now, that's the easiest way for you, our radio audience, to listen and go, oh my gosh, I heard rates went down. Well, the consumer rates went down. That allowed the prime rate to go down, and it helps equity lines right away. But the mortgage market looks out to the future. And right now we're reading in that summer item, which is less than 6 months away. As we do that, our goal is to see our 10-year treasury, the mortgage-backed security trades, maybe go lower. Maybe we see a high 5, and maybe we can get a little bit lower as different lenders have different pricing incentives and items that they may be able to pass along as we do. That's really the key. So we're going to look at the clarity of that. We're going to look at market and expectation and reaction. Sometimes we always go wrong before we go better, and better before we go wrong. So sometimes you have some knee-jerk responses. So we're going to watch those very carefully. We're going to look at the language, and we're going to look at the further guidance going down the line. Now, this matters because the current chairman, Powell, he's going to be replaced in May. That's the end of his term. He can choose to stay on his general term longer or decide he's leaving. Who comes in and who's nominated and who takes over will make a difference. They got 1 or 2 different candidates idea right now. But that's going to show the direction where we're looking at one more move, maybe the first meeting after the May time. That could be it, or it could be the second. But we're watching that carefully. We're watching the tone, the forward guidance, and inflation commentary. Those are going to be important to watch on Wednesday. So I don't want you to rush to decisions on that day, but it's important to understand if you're in a transaction or you're starting a transaction or you're planning, is understanding the direction so you can make better choices. And that's where you get with your professional. Love to be one of them. 888-543-3980. Now on Thursday, we have the GDP, personal income. GDP measures overall economic growth, confirms expansion or slowdown. So income, spending, and data, it indicates consumer strength. It influences lender confidence again and lending behavior. We want to understand who's in the market. Now, it has real world impact. I mean, a healthy income growth supports housing demand. Weak data may slow activity, but does not stop it. Things happen regardless. It's a question how busy that is. And then there's activity as a result. So economic data is a planning tool. It's not a crystal ball. The goal is alignment with your financial life, not a prediction. Now, up next, we're going to shift out of the economy to your personal finances and the Money Max account. I'm Mike Harris. We'll have more after the break. Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America, UnitedForLoans.com. That's UnitedForLoans.com. We are for loans. We're just not for the interest that you're paying. We want to make sure to decrease your interest volume, your interest footprint. We want to make sure you're paying your principal, but you're paying the correct tip, the total interest percentage that you see on your closing statement. That number on the bottom, the one that you don't want to look at, that could be six figures, right? Or not six figures, but 100 and some odd percent. But it is six figures because you're not only paying back what you borrowed, you doubled it up and then some, depending on the rate. Now, when you hit 5.2%, you get over 100. So if you don't believe me, take a look at your mortgage statement. Let's take a look at that principal and interest and find out how much interest you're paying as a percentage of your overall payment. Thank you for listening today here, Your Real Estate Life on Fox Sports Ventura, 1590 AM, 97.9 FM. And also, again, our K-Earth 101 audience on Sunday morning at 7 a.m. Our KBTA audience streams us at kbta.com. Our K-Earth audience streams us at kearth101.com. Now, if you miss part of the program, you can go back on our websites, yourrealestatelife.com or unitedforloans.com, and you can catch the audio. But you can also go onto YouTube, Your Real Estate Life, and you can catch our program, and you can see me talking there on the air. So we're not only on the radio, we're also there on YouTube, and you can watch. You can also go back in the archives, too, on my LinkedIn and catch the program and some great information during the week that I try to provide. But you can have your very own conversation, 888-543-3980. That's 888-543-3980. Now, I talked about not using data as a crystal ball. You want it to provide information so you can make better decisions, and that breeds confidence. Confidence shifts, didn't say that right, did I? Shifts from the economy to personal finances. This segment, as I said, we're going to talk about the Money Max account. It's an educational strategy to keep funds liquid while improving your financial flexibility, focusing on long-term planning, protection, and how real estate fits into legacy and financial security. A lot of words, but it's putting you in a better position, just as it is when you drive in your car and you put a destination in and it tells you the best way to get there. Sometimes it's not exactly the way you thought because there's other things that are going on that are going to cause you not to get there as quickly. So it's having that detour that you don't see that GPS is seeing and you are avoiding. You're not taking that route that others are and stuck in that traffic. Confidence in real estate starts long before you apply for a loan. It starts how you structured your money, whether it's for your down payment or just family security. I mean, you got to look at your monthly income and the money's coming in for whatever method they are. There's lending money, and then there's money that comes in. Sometimes we can't count all streams of income when we go to qualify for a loan. We have to look at what your obligations are as a result, computing what is called a debt to income ratio. That also tells us what is the leftover money at the end of every month. What do you have discretionary leftover money? $1, $10, $100, $1,000, multi-thousands? Depending upon the complications of where you are, whether you're renting right now, owning a home, owning many homes, where it is you have cash flow and you have many different things that are fixing into that. And the more complicated you are, the more choices there are to get it done right. I mean, if you had 6 choices, you have 720 factorial math decisions to make. Holy cow, try getting that right every month. Let alone if you have more than 6, it's even more. So you need to understand that we're not perfect to make all of these computations. We can do the best job we can. Now, it's very difficult to get a hole in one on every single hole on a golf course. You want to avoid the sand, you want to avoid the water, sure. Maybe you 2-putt, maybe you 3-putt, maybe you get par, maybe you're getting a bogey. What's your handicap? You got to be really good to do really well. And then even when you do really well, you still have a coach. So the goal here is to have someone smarter in the room than both you and me and many others combined that doesn't talk back to you, doesn't touch your money, but gives you perfect information when to send, how much to send, and why to send to lower your interest volume footprint as fast and efficiently as possible. Sounds good? Why not find out more about it? It's not going to cost you anything to find out more other than 1 hour of your time. Tuesday night at 5 p.m., I'm offering you a 1-hour webinar. Send me an email, interest@aheadformoney.com, aheadformoney.com. When you send that email, I'm going to send you a little bit more information so you understand it better. Not perfectly, but you'll understand it better, understand the concepts more so than what I'm even saying today. I'm going to give you those items to watch, but also give you access to that call. If that call and that time doesn't work for you, I got it. That's fine. Let's have your very own call that will go one-on-one and talk a little bit further. There's no intimidation. It's a conversation. You tell me what's going on. I'll tell you if it's right for you. If it's not, you'll make that decision. No problem. We have professionals, insurance planners, financial planners, realtors, other mortgage loan professionals, divorce planning professionals who are helping splitting assets. They can greatly improve their clients' performance and level of satisfaction using and utilizing this program. I show them how they can help with their clients. I'm not trying to take their clients. I'm trying to help them with their clients and also get more from that. Recently, I was talking to a mortgage loan professional who was very skeptical about it, and he showed one of his realtor partners, and that realtor partner shared a database with that loan officer to try to see if they can help their past clients. The realtor received 2 additional listings. The loan officer got a refinance from a past client, and they have a number of people moving forward to create more wealth. And by creating wealth, they're going to come back and buy additional property or real estate. So it really can do wonders for the current database that maybe as a professional you have ignored. If you're listening today to the program, whether you're driving here in the morning and you go, well, I haven't heard from my professional. Why hasn't he called me? Well, why haven't I heard about this? Why haven't you? Maybe you have now heard about it and you have no excuse, and maybe it is time to reach out and I can help you. And let's call together that other person and let's show them how this works, or invite them to that 5 p.m. call, or maybe it's a direct one-on-one or one-on-two call that we can go over the merits so they can evaluate it to see how many others they can help and also create possibly more business for them while it is creating wealth for others. So this creates a maintenance and repair program to your current finances. It kind of buckles it all up. It's going to look at all the different items you have, insurance, possible property tax changes, all these things, and kind of wrap it up to kind of run those numbers and stay current. It's going to move with you. It doesn't touch your money, doesn't take your money, and you only need a checking and savings to potentially eliminate 1/3 or 1/2 of your debt time without changing your lifestyle. I've seen people pay off debt in 5 to 7 years. Crazy. When their original date was closer to 30. So it's really a comfortable way to analyze without having to go through all the math and computation. It's optimizing idled cash. It keeps your funds liquid and accessible that need to be. And the opportunity allows you to adjust these items as you want or need to have. It offsets interest costs indirectly and takes you to a debt-free and create wealth more efficiently. It allows you also to do pre-purchase. If you're considering buying a car, considering buying another property, you can do the what if scenarios and gain the actual results in which it would gain. Where sometimes you get a car and it's 72 payments or whatever it is, and you'll have it paid off in a year and 8 months. So it's going to give you the exact level of what can and cannot be done. I mean, you have emergency access without interrupting long-term plans. It's going to give you the ability to set that boundary on your reserves, the money's behind you, your reserves that you need for flexibility, negotiating power. I talk about a home equity line of credit. It's not a necessity, but if you have the equity and can qualify to gain that, you don't have a payment unless you have a balance. But if you use it to pay interest volume off on your first by using it for simple interest, a 7% simple interest is different from a 3% amortized. And you're saying, sure it is, the 3 is lower. The 7 is better simple interest than 3 amortized. I'd like to show you how that is possible, because it's the term of the loan and how it's set up that's different from the number. The number is an illusion in some cases, and we need to make sure you are not part of that trick. 888-543-3980. Now, the Money Max account is not an investment product. It's not a promise of higher returns. It's a promise of better cash flow optimization and management to allow you to have a better return by paying less interest and cutting down that number of what you're paying so you can earn more. It's not influencing the investment. It's making everything run more efficiently. Now, most families, we're not finding that they're struggling because they're not making enough. They're just sending it out in the wrong places. And if we can fix that, then we can perhaps identify the problem. We can coordinate the income to the bills going out with interest accruing daily to you rather than going outside. We can isolate and locate potentially the problem. Now, this brings us to solve these problems automatically, giving you the best information 24/7 without you having to go sit there for hours trying to figure out what happened or what will happen. I like to illustrate how this works for you. We would sit down on camera, have a conversation. I'd probably give you a pre-item so we can gain those monthly, quarterly, semi-annual, annual items so we can put those together and understand how to plug those in to get your debt-free day. Now, some investors say, I'm not looking to be debt-free. I'm just looking to gain more dollars, more income. We can do that too. So understanding your why and what it is you're looking to achieve is very important, usually in our first conversation, because me diving in and doing something and solving your problem when I don't know what your problem is or what you're looking to do, it doesn't make sense for this. It doesn't make sense for your loan also when I'm getting a home loan. I need to know what it is you're looking to get, other than you saying, hey, Mike, give me 2%. Well, okay, that's nice. It's the same thing when someone calls me up and says, hey, Mike, what are interest rates? I have no idea. There's a range, but it may not pertain to you. I don't know if you're self-employed, salaried. I don't know what's going on. I don't know if you have a social security card, your I-10. I don't know. All these things matter to those who understand what it is I just said, I-10. But we need to understand where you are in your journey to make sure we're giving you choices, but also the choices you may not be able to take, but understand why. Well, I heard so-and-so got so-and-so. Well, why did they get it and why is it not available to you? And what is different from your situation and theirs? It's important. But interest volume is important. When you look at your loan estimate or your closing disclosure and you see your rate, your APR, APR is associating all the costs of obtaining your loan to a said number. That's the difference between paying no points and 2 points. And that will be a little different accordingly because you paid more to close. The bottom number is the amount of interest you're paying over the life of your loan. And that translates to the interest volume. And as I said, if it's over 5.2%, you're paying over 100%. If you borrow 400, you're paying over 800, the principal, and then double it up for the interest. So when we got into 6s and 7s, you're paying a lot, and a lot early. Those of you who have a loan that has 6.5 or higher, period, I'd like to speak with you. Whether you're an FHA loan, a VA loan, a conventional loan, a jumbo loan, I want to speak with you. If I can save you monthly monies with the interest rate lower, and you're able to then attack debt with that extra money and pay off your debt sooner, saving thousands of dollars, I'd like to show you how that's done. Now, I've been able to do that little to no cost. The recovery time is little to nil. I'd like to show you how that can be done based upon the market moves that we've seen. And it doesn't eliminate you from doing it again. I'm not putting no prepay on the loan, and that's not what's happening. But whether it's 6 months later, 6 payments in, the market dictates an idea, the end of this year or whatever it is, to lower again, we'll do that. I'm not in the habit of trying to do that over and over again. We got to have a net tangible benefit. But we together can save. Many are handcuffed with their 2, 3, and 4 loan, and they have plenty other debt. I want to show maybe an equity line or other ways to lower that debt, maybe protect that first. But we're finding right now that there's more households that have a 6 in the front number now than a 2 and 3, because they got strangled by other debt and they couldn't afford to keep their 2 and 3. They had to refinance to a higher rate to stretch out the debt to have a better monthly cash flow. If that is the case, I want to eliminate that monthly payment and the debt sooner to gain a lower number on your interest volume footprint. We've taken some 6s down to the 1s where you're paying 70% now. So there's a lot of ways that we can do this. Numbers don't lie, but they hide themselves very well if you're not looking. And I want to help you find them. 888-543-3980. It's how many dollars you pay. The interest rate sounds sexy, but how much of it is it what you're paying? That's really what counts. It's over how much time. It's across all your debt combined. It's just not the mortgage. It's everything. The lower rate doesn't mean lower cost. And I know it sounds contradictory, but it's not. Find out more. Join me on Tuesday night at 5 p.m. Send me an email to interest@aheadformoney.com. Thank you for listening. We'll have more next week. What kind of loan do you have? Thank you for joining us. Where does all the time go? I'm seeing a lot of times right now, people are trying to list their property and they want a set price. They're not seeking out the professional and getting it listed at the right price. Sometimes they're listing at a higher price. When that happens, we potentially have loan issues when we can't get the property appraised. So you want to make sure you have a professional evaluating, or also us as a lender, letting you know the lender's view. If you're thinking about listing a property or buying a property, love to talk to you. 888-543-3980. Until next week, what kind of loan do you have?
You, Richie.